Good afternoon, esteemed traders and investors. Today is Tuesday, December 2nd. I present to your attention another market review for Forex. As always, I'm glad to be here with you today. So, today is Tuesday, and today there is news, as you may know. Supposedly, Powell was supposed to speak, but it's unlikely he did that at 4 a.m., although at that time in America, he very well could have. He could have certainly done something like that, perhaps, but not in Novorossiya. So as for inflation in the Eurozone, it came out, rose a bit, and in the evening at 6 p.m. in the US, accordingly tomorrow, on Wednesday. Let me remind you that today might be relatively quiet, mainly because tomorrow there will be some important news coming from the so-called humorous agency and also from ADP-PRO, both of which will be providing updates about the US non-farm employment numbers. Let's take a look at what we can trade on the charts. Let's go. So, let's start with gold quotes, which my friends are currently dropping just a little bit, but a little means that today the quotes have already dropped by 4,000 and that's unfortunate. But for those individuals who are interested in buying this asset, of course, some particularly interesting and potentially valuable opportunities are emerging. What's the deal here? The thing is, this week the instrument has already heroically set a new high, and right after that, within just a few weeks, people started taking profits. These profit takings could disrupt the bullish trend, my friends. There's a lot of money down below here that no one has shaken out yet. Someone is going to have to take that liquidity. Something tells me that someone won't be you, but my job is to warn you that unfortunately this could happen. For now, of course, the trend remains bullish. The whole long story hasn't been broken yet. But for now, we're just watching. Maybe this is a false breakout on the weekly chart. If, in principle, the week closes like this in the end, including after the non-farm payrolls and so on, then we can consider this a false breakout and start working to the downside. But since the week hasn't closed yet, it's too early to talk about that here. The euro-dollar pair. This instrument is drawing some very interesting patterns. Something tells me that a breakout is brewing here. A breakout of this almost horizontal, gradually sloping resistance line, which the instrument has been consistently testing and retesting since the end of October and now continuing into early December. It makes sense to look for potential long positions, especially after considering how last trading week closed, with the price action showing strength and resilience. It further supports the idea of seeking buying opportunities in this context. Well, not a full engulfing, but still an engulfing pattern. This week, the instrument immediately broke the highs of the past 2 weeks, hinting that it will continue to rise and even further. Our task is to somehow manage to catch a long position, similar to how we did with the previous, as well as the one before last, bullish impulses, which happened on the 4-hour chart. On this time frame, as you can see, last trading week was this long impulse, specifically this one, so logically there will be a pullback to some of these zones. So what are the first support levels we can identify here? So the very first thing we can take here is, let's utilize the shape tool. So the very first significant support level, which the instruments are currently testing right now, is the crucial break that specifically happened yesterday morning at the precise opening of this current trading week. You can buy from this level, potentially with a protective stop-loss order at yesterday's gold low. If it doesn't go, which is possible, then the second area or zone to look for longs is the break from Friday, which in fact triggered the entire long impulse of last week. Accordingly, you can also set your stop here behind November 28th. What is the target of all these long flows that we are observing? It's the renewal of the level 6, 1, 16, 500, 600 and so on as previously mentioned. So, we are expecting this kind of impulse or movement, either from here or from here. On the 4-hour chart, it looks exactly like this, as you can see. That is, the bulls started moving forward and the lower flank break was tested, after which we bought from that particular area. So it is somewhat like a staircase, or more specifically, a trend staircase, which should, in the end, lead to the culmination of this growth. However, for some people, it may instead result in a frenzied, rapid currency enrichment. We are waiting. Perhaps a breakout of this zone will also lead to a global reversal of this entire trend, which is already beginning to take shape and form in this zone.
Looking for real trading advantages? Forex offers the lowest spreads and commissions. On major currency pairs, our conditions are better. Lower spreads and only $5 commission instead of $7. That's real savings for every trader. And now, let's get back to the market review.
the British pound US dollar pair. The British pound US dollar pair might also follow a similar scenario, but unlike the previous instrument, there aren't such interesting and attractive opportunities here. I would say, in analytical terms, there aren't such clear targets as with the previous one. So there really aren't actually such horizontal levels here at this time, but there is, however, a strong bullish impulse, and it would definitely be interesting to see a continuation from that. But there's nothing to rely on for a long position here, at least not for us. Last week, we took this bullish impulse, and there was a level here. As you remember, our H4 was here, so there was an impulse, then a pullback, and then a hit at point X. Basically, there's nothing else here, and honestly, there's no one to hunt for. If you want to buy something, maybe there will be some reversal patterns, but in this zone, they don't exist yet. Even on the 15-minute chart, I don't see anything here to rely on. For example, there was news here, it shot up, and that's it. So we're skipping this one.
I also want to remind you that every InstaForex client automatically receives loss insurance. For every $1 of compensation, only $4 of your friend's investments are required. Just submit a request, and your losses will be recovered. Let's continue with the review.
The Australian dollar, risk currencies, the dollar. Let me remind you that last week also closed with a bullish engulfing pattern. This is bad news for those who want to sell because the intentions, let's call them that, of this instrument are clearly bullish. Definitely bullish. Buying here on a pullback for a breakout is not possible for us at the moment, currently, or at this time. The long break zone is located significantly lower and the instrument is trading quite high in this situation. So either it, or if we get good prices, we'll buy, or simply let the dollar keep rising without us.
With InstaForex, you can triple your profit. For every $4 of your friend's investments, you automatically get an extra $1 added to your profit, with no extra conditions.
The Canadian dollar, in particular, has drawn some very interesting and notable bumps on this instrument over time. But let me remind you once again that the technical test of the giant short break has already taken place, since the dollar here is the base currency in this context. Accordingly, all the ideas regarding the majors here are reversed for us. Let me remind you that the impulse that started at the beginning of last year and is being tested at the end may be the beginning of a large third wave downward, aiming to capture these zones here and all of these zones, which were not taken out at the time. There may be a very strong movement here. The fact that we saw these first impulses is, of course, good. And let me remind you that if you trade based on breakouts, you had your chance. By the way, including the opportunity to buy into this instrument as well. And at the moment, even from a long breakout, the instrument is already giving a nearly 1-to-1 ratio. Ahead of us, we also have some short breakouts. Right here at this very point, we should mark them in red for clarity. They are present there as well, and they are ahead of us, and you can even set them a bit higher if you wish. This is a zone, an area from which you can try to sell with clear, understandable, and well-defined stop losses in place, ensuring your risk is managed.
We also have a great offer. Fund your account and get a 30% tradable bonus. Trade with additional capital and expand your opportunities with InstaForex.
Let's move on to the dollar-yen. Dollar-yen. After its declines, it is gradually being bought back here, which is quite different from the situation where the dollar is weaker for us. There is still some additional room for the devaluation of the yen itself, but I want to remind you that at this very moment, the instrument is currently standing at the short breakout zone that we had identified earlier. So at the start of the week, during yesterday's drop, let's say, in principle, you could carefully try to take about 1,300 with a stop of around 400 from the current level. It's possible that this is indeed a test of the short breakout, and we might start to fall, and then we'll get, it turns out, the first, second, third, fourth, fifth, and eighth wave. Unfortunately, such waves also exist, and here too you can try to take something. But again, you need to watch how the week closes. For now, this is of course a false breakout. If the week closes at least as it is now, then this is a continuation pattern. But for buyers, there's also some good news to consider. The base of the initiative bar here has not yet been broken through. This essentially means that there is still some room for the price to fall, at least enough to update the low point of the weekly candle, which refers to the week before last, not the most recent week. Overall, the zone is not bad, including on the weekly charts. If the instrument really rebounds and you manage to catch it successfully, there is a significant opportunity to hold it up to the lows of 2024 to 2025. From the current levels, this could mean a move of an incredible 16 to 17,000 points. That's all. Trade with InstaForex, subscribe to the channel, and stay tuned for new reviews.